Bill, we continue our series, Mapping the Markets. Market experts join us to tell us what we should be watching for 2012. And while things may be looking up for the bulls in recent weeks, my next guest is skeptical. And he even thinks that the U.S. could go into a depression in 2013. Certainly a recession is in the cards as well. Jim Rogers is chairman and CEO of Rogers Holdings, never shy about his opinions. Jim, always good to see you.
I'm delighted to be here, Maria.
I want to ask you about Europe, but first let me ask you about these comments on the U.S. Do you think things are that bad here in terms of the economy?
Well, 2002 we had a problem. 2008 was worse because the debt was higher. 2013, or whenever the next one is going to be worse still because the debt's going through the roof. So no, it's going to get worse and worse. We're shooting all our bullets. We're wasting money.
So this is the largest debtor nation. You think that the U.S. is a bigger problem than Europe right now?
Yes, the U.S. as a whole is the largest debtor nation in the world, and we have bankrupt states, Illinois, New York, California. In Europe, the whole thing is not a big debtor nation. They're solvent. They've got individual countries, Ireland, Greece, etc., that are bankrupt. But no, they're in much better shape than we are. They're not in good shape, but they're in better shape than we are.
So are you selling into this rally? You've got a market that's up 110 points. Are you shorting stocks? What's your strategy?
No, I'm not doing anything at the moment. I'm sitting and watching because what the Europeans are doing is they're going to announce something or have announced something. They're going to say everything is okay. They've only done this about 10 times in the last 2 years. They keep saying, oh, we'll solve the problem. It's not solving the problem, Maria. It's making the problem worse. No country has announced we're going to have less debt in a year or two or three. They're all going to have higher debt. The problem's getting worse.
All right, so in Europe, we've got, new plans today. They're basically trying to figure out if this is going to be passing muster with the markets. So they're revealing some of the news that there may be 2 bailout funds now to help bail out, the debt crisis there. You think it's effective? I mean, it feels like the market has some momentum and is buying into some of
Yes, no, they're going to announce some good things, and it's going to make everybody feel better for a while. But eventually, a month, 6 weeks, 2 months from now, or 3 months from now, people are going to say, wait a minute, we're back where we were. Things are worse than they were before. No, Maria, the problem of too much debt is not solved by more debt. This is ludicrous.
So the dollar versus the euro. Now, you own dollars because you just think there's momentum there right now. It's obviously not a fundamental reason to own the dollar for you,
momentum. Right? There's momentum. Well, first of all, the dollar was beaten down a lot. And as turmoil occurs around the world, some people will flee to the dollar. Now, the dollar's not a safe haven as far as I'm concerned, but I do own the dollar because people will go there. But Maria, I own some euros too now because, it was beaten down, and they're going to make us feel better for a while. So the euro will rally, stock markets will rally, but be very careful.
What about Asia? I mean, we know that this is a global slowdown. Even when we were in Singapore recently, we noticed that, the economy there slowed down as well. Are you buying in China and throughout the Asian region today?
The Chinese are doing their best to slow things down. They've raised interest rates 6 times. They've raised reserve requirements a dozen times. They're trying to slow things down, and that's having an effect all over Asia, including in Singapore. Everybody's going to have problems in the next couple of years because China's trying to, and the West doesn't have any choice. All
right, so what do you want to do then as far as strategy here? How do you invest in such an environment? You said you're not doing anything in the U.S. You own the dollar, you own euros.
I'm short technology stocks in the U.S. I'm losing money. Not losing money today, but I'm short emerging markets. I'm short European stocks, and I'm long commodities because if the world economy gets better, I'm going to make a lot of money in commodities. I own currencies. I mentioned I also own the Japanese yen. I own the Swiss franc. There are lots of currency opportunities out there in the world. There are plenty of ways to protect yourself. And Maria, when things don't get better, they're going to print a lot more money. And when they print money, you have to own silver. You have to own rice. You have to own real things if you're going to survive.
You have already made a lot of money in commodities. Amazing how you called this call so long ago. Here we have gold at $1,700, $1,729. Does it break 2,000 for 2012?
2012, it might. I doubt it. Maria, gold has been up 11 years in a row. That's very unusual for any asset class. It would not surprise me at all if gold didn't continue to rest and consolidate for a while. It's been consolidating for over 3 months. I hope it continues to consolidate. I hope it goes down. I hope it goes down. I want to buy more.
What about silver? You said you want to own silver. You want to put new money to work in silver right here?
If I need, no, I'm not buying anything right now. But if I had to buy one, gold or silver today, I'd buy silver. because silver's more depressed, that's all. But I hope gold and silver continue to rest and consolidate so that I can buy more, so I can buy a lot more.
And oil. Here we have oil at $101 a barrel. When do you expect the price of oil to become a problem for the economy?
Well, first of all, the economy has adjusted more and more and more. You know, when oil 10 years ago, if you'd said oil was 100, everybody would have passed out and gone home. But now we've adjusted. Oil has been over 100 for 3 or 4 years now. People are adjusting. But it's going to continue to go higher. It's going to have an effect. But remember, Maria, some people will suffer. But the people who produce oil are going to boom as the price of oil goes higher. The people who produce coal, the people who produce uranium, a lot of people boom when oil prices go high.
Okay, so there's real ripple effects on the positive. Real quick, since we're on commodities, MF Global, big day tomorrow. John Corzine's going to be speaking to a number of committees. What's your take on that?
I can't really say, because if I did, I'd go to jail. No, I mean, it's totally outrageous what happened.
Yeah.
Segregated accounts, the first thing you learn when you go into the commodities business is segregated accounts are sacrosanct. No matter what. You can find loopholes or whatever you want to, but that's the last thing you're supposed to touch. I don't see how you can avoid jail. Now, what do I know? You're innocent until proven guilty in America, but that's very bad for all of us.
Amazing, amazing. Sure, we'll be watching John Corzine and the testimony tomorrow. Jim, always wonderful to have you on the program.
Bye-bye.
Good to see you.
Maria.
Jim Rogers here at the end.